If you are over the age of 65 and receiving Social Security, I have what might be the most important financial update of 2026. A brand new bill has just been introduced in Congress, and if passed, it will permanently shield thousands of dollars of your retirement income from the IRS. It is called the Permanent Tax Relief for Seniors Act, officially known as H.R. 7312, led by Representative Miller-Meeks. But before we get into the good news about this bill, we need to talk about the trap millions of seniors are falling into right now when they file their taxes. It is called the combined income trap. Did you know that the IRS uses a special formula to decide if they are going to tax your Social Security? They take your adjusted gross income, add any non-taxable interest, and then add 50% of your yearly Social Security benefits. If that total goes over just $25,000 for a single filer or $32,000 for a married couple, the IRS can tax up to 50% of your benefits. And if you cross $34,000 as a single filer, they can tax up to 85% of your Social Security. Because of inflation, almost everyone is crossing these thresholds. But this new bill is trying to stop the bleeding. So, how does H.R. 7312 fix this? Last year, seniors were temporarily granted a massive $6,000 tax deduction, or $12,000 for married couples, under emergency tax relief, but it had an expiration date. This new bill makes that $6,000 bonus permanent. Let's look at the exact math for 2026 so you can see how powerful this is. If you are filing as a single senior this year, you already get a base standard deduction of $15,750. You also get an age-related bump of $2,000 just for being over 65. Now, add this $6,000 senior bonus on top of that. That means you can earn $23,750 this year without paying a single penny in federal income tax. For a married couple over 65 filing jointly, the math is even better. You get a $31,500 standard deduction, a $3,200 age bump, and the $12,000 bonus. You can shield a staggering $46,700 from the IRS. Let's look at a real-world example. Say you are a single retiree. You get $18,000 a year from Social Security, and you pull $5,000 from a part-time job or an IRA. In the past, that extra $5,000 might have pushed your combined income over the edge, triggering taxes on your Social Security. But with this new $23,750 total deduction shield, your taxable income is completely wiped out. You owe the federal government nothing. But I have to give you one major warning. This $6,000 bonus protects you from the federal government. You still have to watch out for your state. As of 2026, there are still 9 states that tax Social Security benefits, including places like Colorado, Connecticut, Minnesota, and Utah. Even if the IRS doesn't tax you, your state might, so always check your local laws. To claim this massive deduction, you need to make sure you or your accountant are using the correct paperwork. Do not use the standard 1040 form. You must ask for Form 1040-SR. This is the U.S. tax return for seniors. It is specifically designed with larger print and a built-in standard deduction chart right on the first page, so you do not miss these extra age-related bonuses. Before we wrap up, it is time for our question of the day to test your knowledge. When calculating your combined income for taxes, how much of your Social Security benefit does the IRS include in the math? A. 100% of your benefit. B. 50% of your benefit. C. None of it. Let me know your answer, A, B, or C, down in the comments below. I will be replying to everyone who gets it right. Please share this video with your friends so they don't overpay the IRS this year. And I will see you in the next update.